Hey everybody, welcome back to Unemployable. I'm Jeff Dudan. If you have had a front seat to the evolution of the franchise industry since the 70s, have launched and advised many of the world's greatest brands, including McDonald, Subway, and Ace Hardware, and over 500 startup brands, if you have been published in over 400 times in all the places that matter and worked in over 50 global markets, your name can only be Mark Siebert. Welcome, Mark.
Thank you, Jeff. A little bit more than I've actually done. I didn't launch the McDonald's program, and I didn't.
Oh, well, I said launched and advised.
Then I guess I can go with that.
Yeah. Well, look, this is franchising. There's always a little bit of franchise fiction puffed in here.
Well, I try to keep my to a minimum.
Try to keep it to a minimum. Well, that's great. Well, you certainly have been an expert in the industry and certainly well respected. I actually visited your office one time when I was probably around 2000 or so in Chicago. I'm a Chicago guy originally, and I was looking to launch a franchise that I built called AdvantaClean. And I think I was just out there like everybody does, just trying to figure out who's who and who can help us and things like that. So I was home visiting my family and I saw that your office was in Chicago. So I came in there for a couple hours and I met with a couple of your staff members right around the holidays there. So I have been to your location. So, but Mark, I'm excited that you're on here today. Thank you so much.
Well, thank you. Thanks for having me.
Yeah. Opening question: is franchising the greatest wealth creation business model ever invented?
I think for small businesses, it sure is. If you happen to be some kind of a technical genius, you can maybe make more money by creating Google or something. But
sure,
I think for the vast majority of small businesses that are out there in the world today, franchising is the greatest way of expanding. You can grow a business with using other people's money, other people's dedicated time and dedicated efforts, and you can grow it a lot faster because you farm out a lot of the work to the franchisees to do the expansion part. So it's a great way to leverage yourself.
Talking about these startups, is there a ready checklist that you have in your mind when you meet with a new brand? And at the top of the house, surface level, is there half a dozen things or so that they must have in place before you would advise them to franchise?
Yes, and I would say most of my clients will have them in varying different degrees, but there's three major categories that we look for when we're thinking about a company being capable of franchising.
Okay.
The first is whether or not they can sell franchises. And sort of within that sort of broad area, we look at things like, what is the credibility of the management team? What is the credibility of the concept? What is the history of the concept? What is, is it getting a lot of social media attention? Is it something where it is providing an advantage or a value proposition to their franchisees? And we look at whether or not it is got a nicely defined target market in terms of who the franchisee would be. The second thing we look at is the duplicatability or the clonability of a concept. So we're looking at that. We're looking at, do they have systems in place? Do they have operations manuals in place? Is this something that will work in a variety of different markets, or is it, a bikini shop that's in Florida where it might not do so well in Chicago? We look at, is it readily teachable? And then the last, and I think what we would consider to be the acid test of franchising, is really whether or not it is able to provide a good return to the franchisee while simultaneously providing a return to the franchisor. So we look at things like, what is the initial investment? We try and make an adjustment to the P&L statement to reflect any increases in price or any decreases in expenses that may be required based on a variety of different factors, and then look at, does it provide a return on investment and a return on the franchisee's time if they're an owner operator that would be commensurate with the amount of risk that they're taking to get into franchising. So those are the basic criteria.
Yeah. Did you choose franchising, or did franchising choose you?
I think franchising chose me. It was sort of got into my blood early in my career. I started in 1984, and I just loved it. And I started drinking the Kool-Aid pretty early, and I've just loved it ever since. It's sort of like your story, I think, in a lot of respects. I know you're still doing things with franchising even after Van Plain. So,
did you grow up in Chicago?
I did.
Where'd you go to high school?
Evanston Township.
Okay, I was Schaumburg High, 86.
Oh, okay. Well, you're a little bit further west from me, but you're the more or less in the north suburbs, so we got that in common.
Yep, absolutely. And what was the journey from getting into it in 1984 to starting your business?
Well,
or did you start with the business?
I didn't. I started working for a different company that was doing franchise consulting at the time. I don't think they're in existence anymore. Okay. But they were a leader in the marketplace for a number of years, but they did things a little bit differently than I chose to do. I ended up being the president of that company. And then at a certain point in time, I came to the realization that the business model I wanted to create was different than the one that they had created. I really wanted to focus in on having really long-term relationships with my clients. And in order to do that, I knew that I had to hire a different caliber of consultant. I had to hire people that were former CEOs or EVPs or C-level suite folks that had worked in franchise organizations and that were capable of solving a lot of ongoing kind of issues that franchisors can run into, as well as just helping somebody get into business for the first time. So about 20-30% of our business is working with clients on an ongoing basis. And then we have a couple of entities a couple other companies, Top Art Media, which does franchise marketing for franchisors, and Fred Devco, which actually helps sell franchisors. I know you're familiar with Song over there. We do a lot of things for franchisors on a long-term basis, but in order to do that, the initial impetus was I wanted to hire the best in the industry. And so we started iFranchise Group back in 1998 and have been around for 25 odd years at this point.
And at that point in time, iFranchise Group, from my research, which may have been limited, was relatively unique. I know that I ended up using Steve and Judy Raines out of Atlanta. I forget the name of their business. They did Franchise Start, but they were attorneys. And then they would refer somebody out maybe to do the operations manual and things like that. So I think my first franchise advisory was a firm out of Jacksonville when I first started getting educated about it, but it was franchise attorneys as well. When you started iFranchise Group, were there other similar groups to you at that time? Because in my research at the time, it seemed like you were kind of in a class by yourself and was certainly one of the more respected firms that were doing basically franchise creation and early stage support.
Yeah, I don't think there really was anybody else out there that was directly comparable to us back then. A lot of
that's what I thought. Yeah,
would do the legal documents themselves. We always believed that you should have a separate relationship with your attorney.
Right.
Feel that there's a conflict of interest if I'm going to be representing somebody as their lawyer and making business recommendations at the same time. That doesn't really work out from an ethics standpoint. So we have always referred out the legal documents and have just focused in on the business side of the transaction.
You mentioned 3 areas that you look to when you're helping somebody decide whether they're ready to franchise their brand. Mm-hmm. What can you share about what makes a great brand? The ones that go big, the Five Guys, the Orange Theory Fitnesses, the people that seem to do it exceptionally well. What can you share about some of the excellence that helps those companies achieve the heights that they achieve?
I think that you answered your own question there, because you said the people that do this, and that's really what it's about. It's the thing that characterizes the great franchisors is typically really great management. It's not necessarily that they've got the best concept, although the best concept certainly helps, but it's about management. The things that slow companies down. They don't have enough capital. They don't adapt to market changes, and they've got bad management. But good management will avoid the first two problems, right? The good management will find the capital. Good management will adapt the concept. But there's no cure for bad management. So the companies that really do the best are the ones that have somebody that is really devoted to franchising and that hopefully is a good leader and a good manager and is really focusing on franchisee success. And if there was a non-people issue, I would say it's the success of the concept and being able to make your franchisees successful. But that, to me, is part of management.
Yeah, the four-wall economics of the unit seems, in my experience, to make it hard or easy if the franchisees aren't able to find a path to profitability that is commensurate with what they have to invest, and not only upfront, but also in ongoing time and energy and money. There needs to be a commensurate there needs to, we're at Homefront Brands, we talk about outcomes, and what would be the outcomes that we would strive for to help our franchisees achieve? Well, at the end of the day, whenever they sell their business, and it could be in 5 or 6 years or 7 years in a home service concept, or it could be generations down there, it could be decades down the road. It all depends on where the business sits inside their personal wealth portfolio. But we would want them to believe that it was a good commercial exchange of their time, energy, money, and also of their opportunity cost in favor of doing something else. We would want them to believe that we continuously invested and improved and adapted to the market, like you say. And then we would want them to say something about, like, these were good people and I would do something with them again, meaning all of our advice, they always knew that all of our advices and everything we did was clearly in their best interests. It wasn't trying to take money out of their pocket and put it into our pocket. It was clearly a partnership from mentality. And, so those are, we talk about those things at Homefront Brands, and how do we make sure that we keep our franchise owners' outcomes in the forefront of what we do. And if we do that, then, we'll have success and then there's always challenges. Like, there's always going to be challenges in franchising, especially when you're growing fast, which kind of leads to my next question. What about the discipline? And here's what I mean by that. And I forget, it was either Jimmy John's or it was Jersey Mike's. It was one of the two concepts, but they would only give their franchise owners one location. And they had to perform to a certain level before they would ever get a second location. And today there's a lot of multi-unit franchising and people buying 5s and 10s and of this, that, and the other thing. Where does discipline with unit economics, franchisee performance fall into helping brands be successful, even though it might take a brand longer under a more disciplined strategy to achieve national footprint? What's been is there any stories you can share, or any particularly anecdotes that you can share about, like, how should a franchisor think about discipline, especially an emerging one? Because they're going to get out there and they're going to find lots of people are going to say, hey, we can do lots of development, we can put lots of deals on you, or join this group or join that group. And at the end of the day, look, there's always adaptations that need to be made. So, and I know Orange Theory at one point, I think they pulled their program for 6 months because they didn't feel like they had everything exactly right. And then when they back to market, they had it, what they felt was as good as, perfect's the enemy of good, but as perfect as they could get it. And then they went on to have great success.
Well, there's a number of companies out there that actually will only let somebody take one location to begin with. McDonald's actually has had that philosophy for the last number of years. Culver's has had a philosophy like that. Chick-fil-A won't let people do more than 2 units. That's their cap, and they'll only let them start with 1. And, the nice thing about that approach, and, other people have taken different approaches and been successful, but the nice thing about that approach is that the franchisee is sort of required to meet certain performance goals before you let them do that next one. You can make sure that that person actually knows what they're doing, and you can feel comfortable in having them open the second location. What McDonald's would do is they'll say that you have to meet 3 criteria to be eligible for growth and rewrite. And that is, number one, you have to have certain key performance indicators that measure up. Second, you have to have certain quality scores. And third, you have to have a manager in place that's gone through Hamburger University that is somebody who could take on your existing location while you open the next one. And so they're focused in on the things that are important, the quality scores, the performance, and of course, the management, the people side of the business. I would tell you that discipline is really, it comes in a lot of forms. You mentioned speed of growth and what Orange Theory did. Dave Hood, who was my partner at iFranchise Group, used to be the president over at Auntie Anne's Pretzels. And he turned down one A-list Hollywood actress who wanted to buy a franchise because she was not the right profile for Auntie Anne's Pretzels. And this person ended up wanting to speak with the owner of the company, and she said, "Do you know who I am?" And the owner of the company said, "No, who are you?" So it was sort of an interesting conversation. But when the other thing Dave did is for many years, he would not go west of the Mississippi, just because it was too far for them to travel. I think that as a franchisor, a lot of times you see franchisors where you look at their website, and when you do, you'll see that they've got locations scattered all across the U.S. And that's really hard to service. And it usually is a sign of a sort of a, I'll sell to anybody who wants to buy one kind of mentality, which sort of reflects that lack of discipline or lack of planning that can be instrumental in being successful. We normally recommend that you start in your first year within a 3-hour drive time of where your location is. So you can get up in the morning, you can drive to the location, service your franchisee that day, be back at home in your own bed that same night. And until you're at a point where you've got people in the different markets, it's hard to do that. As you pointed out earlier, it's all about the success of your franchisees. If you have successful franchisees, they'll buy a second location, they'll buy a third location, they will spread the gospel about how great your franchise is and how great you're doing. But if you have unsuccessful franchisees, you will fail as a franchisor. Eventually, you're going to fail. So you have to get your franchisees to be successful.
I don't think it's our job to put a number to this. However, in my experience, one of the reasons franchisors struggle is that they were not given a realistic expectation about how much this actually costs. When I launched AdvantaClean, like many other brands that I've been involved with, I had a large business. So because we had a large business, national, even international restoration, responding to disasters, we had governmental clients all over the country, Canada, Hawaii, California. So we had flow and we had people, and we were able to kind of apportion off some of our people and move them into the franchise program. The problem is we didn't hit it fast enough, and it took forever because lack of focus will always lead to a lack of greatness. So ultimately, what got my franchise program off the ground is I sold all my company stores and I refranchised them, and I raised maybe $4 million or $5 million in doing that. And I used that to fund my franchise program, pay for my franchise habit. And we kept our commercial services, our governmental business, our national account business, so that we could also seed the franchise owners with work as we were doing that. So for us, that was the transition strategy. But until I decided to basically burn the boats and kind of head into the jungle and say, we're a franchisor now, we're not even operating. Now, we had franchisees for 3 years in Orlando, Greenville, Spartanburg, South Carolina, Columbia, and Charlotte. So now we got to cut our teeth as a franchisor. Like you said, go work with these people, figure out what the true challenges were going to be with true third-party franchise operators. And then in 2009, we were able to go to the market and have some level of success. That being said, many people, especially with the internet now, with chat, I mean, I see things on chat. I mean, my nephew's a college baseball pitcher, And I just wanted to see how he did one night. And I went into like Grok and I typed in, and it gave me a complete account of last night's game, what his stats were, his pitching, the run. It was actually a combination of the previous 3 games. It was so wrong. Like, it wasn't even close. And I think, sometimes we'll get letters from franchisees now, clearly, that they wrote on chat or on Grok or things like that don't have the facts exactly right. So, and if I'm a franchisor and I'm trying to really discern what it's going to take me to get it done, I might get some misinformation. But I will tell you that it takes more than $50,000 or $125,000 paid to a consultant or a startup business to launch a franchise system. You've got to hire people ahead of revenue. You got to have training. You got to have materials. You got to be able to afford the development process. And the faster you award franchises, the more it's actually going to cost you, because you've got to have more resources for these people. So there's this bolus of my experience is, in the times that we've really done accelerated development, it cost me more than I thought it would cost. And in doing it, and I think some people get into franchising and they think, well, we're just going to clip a couple of points off these and it's going to be profitable from day one. And as a franchisor, that's not been my experience. So how would you advise people to think about, look, if you're going to go down this franchise path with your business, number one, you've got to have great advisory, because you're going to have to do just the right things in the right order at the right time, so you don't waste time, energy, and money. Number two, you're going to have discipline not to award people that are going to be problems, because they're just going to cost you more money down the road. So you're going to have some discipline, and like you said, who the franchisees are going to be in that particular model that are going to be good. And then it's just going to cost some money. And I think when I see this bolus of new startup franchise brands out there, how are you counseling them to make sure that they're deep enough and they're committed enough to see this thing through the first 24 or 36 months?
Well, you're absolutely right. Now, franchising is a low-cost means of expansion, but it's not a no-cost means of expansion. And people need to be prepared for the franchise growth and that they're planning. From our perspective, the other thing I think that was a very salient point that you brought up was the faster you grow, the more money you need to launch. If you're going to try to grow aggressively, you have to have more capital for franchise marketing. You do have to hire in advance of the need. You do have to develop, a broader range of legal options in terms of, you might open up more territories initially. You are going to be focused in on, having additional tools that will allow you to process more franchisees more quickly. But I think that where the advice sometimes is short, it is a little bit short in terms of what is given to people in the marketplace, is that if you want to grow slowly, you can grow for less money, but the speed is really the thing that's going to create the capital requirements. And people need to understand, if you want to grow fast, it could cost you $300,000, $400,000, $500,000 to launch this, because you got 5 buckets. You've got the consulting work that you're going to do. You got the legal work. You've got the miscellaneous travel and everything else, but you also have the cost of marketing, which these days is going to cost you, if you don't use broker networks, it's going to cost you $13,000 per franchise, just on the marketing side. And then you got the people, and you have to budget for all those things, not just the consultant. But if you're looking to sell 1 or 2 to your brother-in-law and a friend who's worked for you over the course of the years, maybe you can do that less expensively. So the key is really going to be to sort of right size your expectations with your budget. So if you are looking to grow slowly, maybe you can get into the business of franchising less expensively and then ramp up in later years. But if you're looking to start out aggressive, you need somebody who's going to shoot straight with you and tell you exactly what it's going to cost you. From our standpoint, we go through that every time we meet with a client. So we try to make sure that they understand that, and we start by thinking about, what are their goals? Where do they want to be 5 years from now? And when they get back to us and they say, this is how, this is where I want to be, or this is how much I want to sell the business for, you sort of back into, what do you have to do in year 1? And what is it going to cost you in terms of franchise marketing in terms of, do you need to hire people in that first year, or can you leverage off your team? And that's going to give them a budget. And if they can't do it, then you got to readjust their goals or readjust their timeline.
Specifically, when you're spending that $13,000 in driving leads, you can spend it, but you better have the proper CRM that's going to reach out and touch these people immediately. It's going to accept leads the right way. You can't have too much information on that form, because if you interrogate people, they'll never click the button. So there's just this perfect balance in exactly the information you get to get the lead in. And then from there, what is it? If you talk to somebody in the first 5 minutes, you're 9 times more likely to close them. So you've got to have not only the capabilities to get back to people right away. Like it might be 8:00 at night and I'm just sitting on my couch and that designery franchise ad hits my Facebook and I click that button and I'm available and I'm in the moment and I'm thinking about it. And, our people will call you back within a couple of minutes and say, "Hey, what are you doing on my website at 8:00 on a Friday night, Bob?" and just kind of break we don't want to take your whole night, but like just a quick little 5 to 10 minute call to say, got your lead, and, and just kind of create that little bond. And then of course you've got to get those leads to a very skilled, knowledgeable advisor person that can help these people assess whether this is a good fit for them. And think about all the cost in all of that. So before you spend the $13,000, you've got to have the machine built, or you're just throwing $13,000 into the wind. Because if you just let those drop and send them an email some weeks down the road, you just wasted your money.
Yeah, well, you're absolutely right about that. And, it's interesting, some of the surveys that you see when some of the industry organizations out there do these surveys, and it says, I saw one recently where it said that I think it was 60% of people got back to people within 2 days. And that means 40% didn't. It's like, wow, it's like you have to be ready to get on that phone call. If you're not talking to somebody within the first 30 minutes, you're behind the game these days. So that's absolutely true. You have to have that kind of mentality, or you have somebody who's going to do that, especially if you're looking to grow more aggressively and you're spending more money on the marketing side.
I'm interested in your take on the current climate. I think it feels like there is more franchisee advocacy out there, and there's more, there seems to be more legal on the franchisee side. There certainly seems to be consolidation with private equity coming into many of the boxes, even in home service now, obviously in concepts like Planet Fitness, where you get large boxes, you get good cash flow, you get people that have aggregated 30, 50 units together, and those become very attractive operating models for private equity to come inside of it. I know that private equity made a big difference in ServPro then when they acquired ServPro 4 or 5 years ago, and have really accelerated, allowed, and then private equity into the ranks there, which has really accelerated some growth inside of that system. So you've got a lot of trends and that are in a lot of forces that are at play in franchising now that maybe 20, 25 years ago, not so much. It was a founder and it was a family. And that's another question I'm going to ask. I'm going to remind to get back to that, but it was a founder, it was a family, it was franchisees. You came in and met personally. You knew who they were, what their families were, and all of that. And there was a relationship there and a commitment to each other to help the franchisee to help grow the brand and to do their part. And then from the franchisor to make sure that they paid close enough attention to who these people were and what they needed and all of that. What comments do you have about the climate today in franchising, especially the impact that maybe private equity has in accelerating the pressure to grow at the franchisee level?
Well, it's private equity is absolutely one of the big factors of what's happened recently in franchising. It has had really a profound effect on sort of the broker networks in particular. So it used to be that the brokers would charge, 30, 40% of the franchise fee, and that was fairly consistent. I saw one the other day that came across where a particular franchise company was paying 108% of their franchise fee. They're paying $65,000 brokerage commissions on a $60,000 franchise fee, right? So it's like, and that doesn't include a sales commission. If you have to pay your sales guy, it doesn't include the time that you have to pay the sales guy to sell this. But the private equity companies that own these kind of businesses understand that if they invest the money now in the marketing and they invest more money and get more interest early, and they're able to ramp up that growth, that when they sell the company 5 years from now, that they're going to be able to sell it for a lot more money, and it's going to come back to them many times over in terms of what they paid that broker. So it does make it more difficult, though, for smaller companies that are getting into franchising for the first time to be successful, because they can't compete as well in the broker networks if they're not willing to give up large portions of their capital. So that's one of the things we've seen. There's been sort of the growth of platform-based franchise companies, like yours and like others, where they are able to consolidate some of the overhead and make the organization more effective from that perspective and more profitable. And again, that's something that was originally done, I think, by some of the folks that were sort of backed by private equity, and that's been a model that has been that's still to this day being done by a lot of the private equity companies where they're trying to consolidate multiple brands under a single roof. We're seeing a lot of other things though at play as well. So I mean, this is such a dynamic market. Sort of the advent of the AI and what people are doing these days. It used to be all about SEO, search engine optimization, but now it's GEO, as generative engine optimization. And if you can't optimize for ChatGPT, if you look at your search results, what comes up first? It's generally speaking, it's going to be the chat results, then it's going to be the paid results, then it's the SEO results. So you're at the bottom of the page if you're just doing SEO these days. You have to understand how to work with chat and with other kinds of AI-related tools. And that's a big development. You look at what's going on, there are some favorable things that are out there. The Congress is introducing legislation that they can never get off their hands. And I don't want to make this too time sensitive, so I won't talk about what's going on right now, but they are introducing legislation that's going to clarify joint employment. And that seems to have bipartisan support, which will be a real boon for franchising, because that has always been an issue that the franchise community has had some concerns about, the joint employment issue. If you do things right, you can sort of avoid that. The financing these days is a concern, especially for the bigger box kind of players. It's, the interest rates have remained above where one might normally think they should be in this environment. And hopefully those are going to come down in the short term, but the franchising has continued to grow despite these higher interest rates. So we'll see what happens when the interest rates come down, which they should pretty soon. And if they do, I would thoroughly expect that's going to be another, major driving force. It's going to start accelerating franchising even faster than it's growing right now. So it's a real interesting time to be a franchisor. But a lot of the things that are out there, the downside of the private equity part of the business is that private equity companies are driving up the cost of doing business in certain channels from a marketing standpoint. But the upside is there are so many private equity buyers out there that are interested in buying franchise companies. When I got started, even with iFranchise Group 25 years ago, there were 2 or 3 companies out there in the private equity space that will even take a look at a franchise company, and most just didn't understand the business model. But nowadays, there are bidding wars on almost all the franchisors that are out there that are talking to these private equity guys. One of the companies that you mentioned earlier got sold to private equity. I won't mention their name, but I was told it was a 25 times multiple. And 25 times, that's like public market kind of stuff. One of our clients got 20x. Another one just got 14.5x. Getting 14, 15 times earnings is not at all unusual in today's private equity world. And if you're bigger and a faster growing brand, you can do better than that. So, I mean, it's the the opportunities for exit today are real and provide some real advantages to franchise companies.
Does it take a human, a founder, a family to most effectively launch a franchise brand? Or can a corporation, maybe backed by private equity, launch a brand? Bracket that by saying generally the first 15 or 20 franchise owners, they're going to buy into the person and the story and the expertise. The founder has operated in this space for some amount of time. And it seemed to me, or at least I had a thesis some time ago, that it really, if you looked around, it was really a founder that started the franchise brands. And then when they reach a certain scale or a certain size, when you get up to be driven brands, it doesn't matter who owns driven brands anymore. You've got multi-billion-dollar systems, and it does who's ever at the helm of it. It doesn't matter one way or another necessarily. The economics are established, the business model is established, the marketplace, the brand, all of that. But talk to me a little bit about who's coming to iFranchise Group today in terms of people that are looking to enter the franchise marketplace, and do you have any concerns about maybe a non-individual bringing you a concept, maybe a group or a consortium saying, we want to franchise this?
Well, I think that you sort of laid out an interesting dichotomy, because I think that it is true that when franchisors first get started, it's almost always started by a founder.
Right.
It's in the early going of most of these businesses, you don't see, and frankly, you don't see private equity interested in a one-off operation and turning it into a franchise. Usually the private equity comes in when they've got 20, 30, 50, 100, 200 locations or more. The bigger they are, the more private equity guys are buying, are bidding on them. So the private equity guys, if you're not, as a franchisor, if you're not putting $1 million to the bottom line, they're not going to buy you, and $1 million is really at the low end of the scale. Most of them are looking for at least a $2 million net before they even start thinking about working with you. They'll develop the relationship, but they're not going to put in an LOI on you. So the private equity guys tend to come in later. And so I don't, most of what I see is founders and companies or somebody who bought the business from a founder that is, they've got 1 to 15 locations and they're looking to grow more aggressively, on the startup side anyhow. As I said, we still see the established franchisors all the time as well. But on the startup side, it's usually a founder. And I think that people do buy into that founder and that founder's vision more than they will, an early stage company that's run by private equity. That being said, depending on the size of the company, I don't have any problem with it being something that's not founder led as an early stage startup. So we started working with Potbelly sandwiches when they had 250 locations. They were not franchising at that time, but they had a pretty well established infrastructure, and they were a very credible company. We're working with a company called Service Experts that is a very large scale operation. And they started out with, many, many hundreds of operations that were not franchised and got into it at a later stage. So I don't have a problem with companies that are maybe not founder led if they've got the right management teams in place. But I think that you're right in that, especially with the smaller concepts, it's almost always going to be founder led.
I'm interested in your global practice and to understand your view of international franchising, meaning the flow of concepts now into the United States. I find more and more people reaching out to me from Australia or places like that and saying, I've got a concept I think it would be good in the United States, where obviously I believe the world's largest franchise market by many times over. What's your view of international today? And have you seen an increase or an uptick in international brands coming to the United States, and also United States brands exporting themselves to other countries?
really in both directions. It's becoming much more of a global market these days. We've had, some very big companies that have been very successful, that have been our clients. So Perry Baguette came from Korea, and they've got a number of locations. BB.Q came from Korea. Bonchon came from Korea. There are folks in Guatemala, a company called Pollo Campero that came here from Guatemala that is done very well here. So we've seen a lot of different companies who've come to America, recognizing that America is just a tremendous market to get into. And from a franchise standpoint, and that I'm just scratching the surface with the names that I've just mentioned there. There's just a tremendous market here if you can make the concept work here. That being said, it's also one of the most competitive markets in the world. And so if you're coming into the U.S., you really better have your act together before you do it, because it's not going to be the easiest market to penetrate. And it's not something where you can just start selling a franchise and hope that it works. It's a substantial investment. It's anytime you go international, it's more of an investment that people oftentimes give it credit for. On the outbound side, we caution our clients to make sure that you're big enough to support international growth before you start looking international. Yeah. I've seen companies who go international with very few, and for the vast majority of them, it does not work out. There are occasional exceptions. Steak Shack, for example, when they got started, they started out with a deal with a very large player in the Middle East, and that essentially funded their domestic growth. So you will occasionally see it work, but I would much rather see my clients wait until they're well established, they've got a team in place, and they've got the resources to support international growth before they even consider it.
I've heard such horror stories from franchisor friends about their escapades around the world and how they would launch to some Eastern Bloc company, and they'd have to go there and find out that they had awarded the master franchise to basically the mafia over there. They go to collect their money, and the next thing you know, somebody shows up at their doorstep in Australia talking to their wife, and it's like, you just need to stop collecting your money. I mean, and I've heard about people having a concept that was painting cars, and they had it under an underpass in China somewhere. I mean, it's the controls that you get, and then also the different legal environments. Like, by the way, you can't just sue people if they don't pay you in certain countries. It's just not the way it works over there. So do people struggle internationally because they just fail to truly understand the landscape? They pick the wrong countries. They underestimate the capital requirements or commitment it's going to take to put people on the ground over there. We do operate in Canada, and there's stuff that we have to do just to operate in Canada. And it's literally right across we're just the noisy downstairs neighbor to Canada at the end of the day. So you just go right up the stairs and they're up there, but there's complexity to it. What do you think is the main reason that, other than maybe, is it capital? Is it picking the wrong places, or you think people just underestimating what it's going to take?
I think that it is largely done on an opportunistic basis, as opposed to creating a plan. Somebody calls in and says, I'm in Venezuela and I want to roll out your burrito thing or whatever. It's some person who, and what it boils down to partner selection. When I talked about the one that was sort of I guess it's Steak Shack, but it's Shake Shack. But when Shake Shack got their program together, it was with a company called Alshaya, which is just a monster of a company that has done multiple different franchises over the years. They would be, if you got a phone call from Alshaya, you'd probably take that phone call. But if you get an opportunistic phone call from some person that you don't know, chances of you getting the wrong partner are 95%. It's pretty unusual that that the right partner just happens to pop up in a foreign market. You should be being very selective in terms of who you're going to work with. So I would say, number one, don't grow opportunistically abroad. You should have a plan for growing abroad, a plan for supporting. You should have an understanding of which markets are going to be the right markets to go into. There was a U.S. burger chain that had not franchised domestically, but decided to franchise internationally, and it's a pretty big chain. They went into a market and tried to sell franchise in that market. They found somebody to buy the franchise. I'm guessing it was opportunistic, and they failed because the market they went into was 40% Hindu and 40% Buddhist. And it's like, well, you're not going to sell a lot of burgers to those guys.
No.
So you have to you have to understand that's probably not the first place to make your international bones, right? Let's start domestically, figure out how to support these folks. Then when you're ready and you have the team in place to do it, then it's time to go international. But don't get dollar signs in your eyes because somebody from Saudi Arabia sent you an email. It's going to not work out more times than not. It's going to cost you a lot of time and effort, and focus on what really should be your growth strategy in the U.S.
Are there some international markets that would be the top 5 that are similar to the United States that you see people having a better chance of success in?
Well, I think that Canada is one where, because of its proximity to the States, it would be one that you want to make it to put at the top of your list. They have some registration laws that are similar, or actually disclosure laws, not registration laws, that are similar to some of the disclosure laws in the U.S. At the provincial level, there's no law across all of Canada on franchising, but they're culturally pretty similar to us. Their dollar is unfortunately not performed really well in recent years, so that can be an issue. But from a cultural standpoint, they're in the same time zone. They're in the same general culture that we have in a lot of respects. So that would be the sort of logical place to jump off for most companies going international.
I have business associates that are non-franchised, and then also some franchising affiliates that seem to be making trips over to Dubai. What is going on over there in the franchise space?
Well, we've got an office over there, and sort of the whole Middle East has been a very strong market, although the tension in the Middle East, going up and going down with various things that happen, does make it a very volatile market in terms of your ability to sell franchises. But it's also a very different market than what we've got in the United States here. Culturally, from cultural standpoint, the ability to serve alcohol, for example, in a lot of locations is not going to do well in certain markets. You're not going to be able to replicate that in Saudi Arabia, for example. And even in some of the other markets, it's not like they have they have bars. Maybe they allow you to drink in some of the hotels or something. From a religious standpoint, there are different dietary restrictions, on things like pork, etc., or on alcohol as well, that will become issues. There are issues relative to the laws there. You're operating under Sharia law as opposed to operating under U.S. laws. And as you pointed out, if you want to try and sue somebody in Saudi Arabia, good luck with that. So again, it boils down to finding that right partner and being a good partner on your end. But it's a market that really does buy into franchising. I go out there once a year, and so I'm pretty familiar with Dubai and and the UAE, and we've got a franchise program right now where we're helping companies. We've been engaged by a offshoot of the government of Bahrain to help them to franchise their businesses, around the region. So there's a number of things that are very promising about the marketplace, but there's also issues that, as a U.S. franchisor, you have to be very cognizant of and go in there with an understanding of what those issues are in advance.
Seems like Australia and New Zealand are similar franchise markets. They do have franchise concepts there, and obviously the language is similar, not exactly the same, but close enough.
Yeah, they're very good. They're very good markets. But they're small. So
markets, right?
Australia's, it's I don't know 1/20th the size of the U.S. And it's very, while you see a continent that is, bigger than the U.S., I believe, almost all of its inhabitants live within 50 miles of the coast.
Right.
So it's not like the United States from a distribution standpoint either. But they're very good franchise markets. The labor market in Australia is a little bit difficult to navigate, just because some of the labor laws that they've got are a little more difficult, just a little bit more difficult for small businesses to navigate in terms of some of the costs and some of the responsibilities.
Got it. You wrote a book, Franchise Your Business, The Guide to Employing the Greatest Growth Strategy Ever. Who'd you write this for, and what would people get out of it?
I really wrote it for companies thinking about franchising for the first time.
Okay.
And it's geared toward somebody who owns a business and is trying to make that decision. It starts by talking a little bit about, what is a franchise, what's the definition of a franchise, and then goes into what are the alternatives to franchising, and how do you choose between franchising and the alternatives? How do you know if your business model is in fact franchisable? And then how do you develop a growth plan backing into, what your long-term goals are from that? And then the steps that are involved in actually becoming a franchisor. So how do you do the strategic planning? How do you do the quality control? How do you do the franchise marketing? How do you do franchise sales? It talks also about things like, going international, or working with private equity companies. So it's a pretty broad-based book that talks about a lot of the aspects of franchising, but it's sort of an educational book for somebody who's thinking about franchising. Franchising is not going to be right for everybody, but for those that it is right, I hope that what I've done is provided them with a good roadmap for making that decision. And if they do make the decision, for a good roadmap for what they need to do in order to be successful and have successful franchisees.
Am I correct that you've recently updated the book?
Yeah, this is second edition. I was pleased. I think only about 5% of the books out there ever get into a second edition, but this is second edition, so I was sort of pleased to see that.
So much happening. I'm an active franchisor right now, and as we think about the future of our programs and we incorporate AI and all of the areas of the business that we can really provide meaningful help to franchise owners now, and then what's a restructure and the flow of information. But look, fundamentally, at the end of the day, and this is something I've come to recently, there is an established model in franchising. And if you look at the companies that have been successful over 30, 40, 50, or 60 years, they find this perfect balance between the fees and who does what. And, there's really, with private equity coming into franchising, there was this gold rush. I had a economics professor in college, and I guarantee he doesn't remember me, but he would say, anytime that there's profitability or that there'd be a green flag that would be waving and everybody will run to it. And it's been that way in franchising really since maybe 2010, 12, 14, with, companies that have franchised their businesses being rewarded. And there's just a lot of and which leads to sometimes some variations on a theme that seem like a good idea, And we talk to our franchise owners about following the plan and not having a genius attack. And when you look at the franchise model, I mean, it's really simple. I mean, you've got to make sure that there's economics in the store for people and families to make money. You can't give people a jet airplane because 99% of people will crash a jet airplane. You got to give them something that a reasonable person on an average day can make predictable revenues and predictable profits. And it can be operated by the large, the large community of people out there will be able to successfully operate this business. The economics need to be right. And then inside of that, like what gets centralized, what gets done for them, and what gets done collaboratively. And a lot of things around customer acquisition, like, do you want every single franchise owner to have to understand how to do Facebook Business Manager? Or is that something that gets done for them? Learning how to place Google campaigns and all these types of things. So you look at everything that has to be done, you have to decide, can you create value by doing it with a few people instead of having hundreds of franchise owners have to learn how to do this thing? And there's just so many opportunities inside of that. And then how does that get paid for? And how does it get monetized? So, but as I get right back down to it, it's relatively simple. And there have been some unique things where people have created good economics for both the franchisor and the franchisee. And if you can create economics for everybody, then that feels like a win. And there have been some really innovative things that have happened. But I think by and large, it's there's a model. And if you try to shift too much of the economics into one bucket, if the franchisor's bucket, then you're going to be squeezing the franchisee's economics. And if you don't leave enough economics at the franchisor, then you're not going to be able to provide the services that a sophisticated franchisee is going to be demanding from you. So it's really this balance and good collaboration, good transparency, and building something that kind of works for everybody. So it's, I don't know where I was going with that, Mark, but I lost the question in my head. So I just decided to do a solo comment.
Yeah, I mean, honestly, this is something that we do for our clients on a pretty regular basis. Getting the fees right. People a lot of times take this sort of Me Too approach to franchising, where they'll say, XYZ company is at a 6% royalty and they're a competitor of mine, so that's what I'm going to be at. The problem is when your company has to, number one, has to differentiate itself from anybody out there who is a competitor of yours. And that might mean that you're going to be doing more things for them or less things for them. It might be that your mix of services to your franchisee is different. It might mean that your position in the marketplace is different. It might mean your pricing is different. So you have to be able to adjust and, what's your average unit volume versus theirs? What's the return on investment for them versus your competitors? And you sit there and take a look at all those questions. We go through a very extensive process for strategic planning just to get to that fee and that royalty kind of percentage. People don't think about it, but if you're off by 1% on your royalty and your average unit volume for your franchisees comes in at $500,000, that's a $5,000 mistake, and it's right off the bottom line. And people think, well, it's $5,000, but it's not $5,000. It's $5,000 times every franchise that you sell it to. You sell 100 franchises, well, it's a $500,000 mistake, but it's not a $500,000 mistake either, because you didn't sign it for a 1-year term. You signed these guys for maybe 10-year contract term. If it's a 10-year contract term, that's now a $5 million mistake. And that $5 million mistake, if you decide to sell your business at the end of 10 years, and you're not putting that $500,000 to the bottom line, and you get a 15 times multiple on that $500,000, then there's another 10 million there.
Right.
So it's like, I don't know if you're old enough to remember our old senator from Illinois, Everett Dirksen, who said $1 billion here, $1 billion there. Pretty soon you're talking real money. It's in franchising, it's not quite the government, so it's $1 million here, $1 million there. Pretty soon you're talking real money. But you have to get those numbers right up front. And that's what companies like ours do. We try and help companies to make good decisions about franchising, maintain their quality control, develop means to sell their franchises and sell them at a rate of speed that's sustainable for them, but reaches those goals, and help them to know how to implement that business. sort of within the context of best practices. And that's, but getting the numbers right, it starts right there.
Yeah. Yeah. It's a perfect balance, and it's absolutely critical. And for somebody who is a first-time franchisor, there is no way that you can have the context to be able to make that decision by yourself, which is why you, Dave Hood, I'm not sure if he still works with you or not, but everybody at iFranchise Group is there, an incredible group of professionals there. I remember over the years when I've had occasion to bump up against you guys and engage with you guys, I always would go to the website and was just like, wow, this is a deep bench of, not decades, hundreds and hundreds of years of franchise experience within the organization.
Yeah. It's, if there's one thing that I've managed to do right, it's really to attract really great people. And, when I look at the team that has joined iFranchise Group, I couldn't be, any more proud of the group that we've assembled and the accomplishments that these guys have had. They're really the brains behind the operation at iFranchise Group, Dave and the team that he's assembled in strategic planning, and some of the other folks in operations and marketing. These guys are the folks that really make things happen. And I've just been fortunate to go along for the ride with these guys.
Yep. It's a great team. When I sold Advantically, I sent my resume into you guys, but you just wrote back unsubscribe. So I figured you weren't interested in me, but maybe next time around, I'll get through the door. Maybe you can put in a good word.
Well, I think if you wanted a consultant, we certainly have a place for our bench. There's not about that, but I think you got bigger fish to fry right now with Homefront.
We're working on it, but there will be a day soon, sir. There will be a day soon. So I've got a curveball, and it's time for us to tug on the reins a little bit and turn this horse towards the barn. I have a curveball for you and then a fastball right down the middle for you. But before that, can you share with the people where to get in touch with you?
If they can go to iFranchiseGroup.com, that's probably the best place. It's a small I, the word franchise, word group.com. It's the easiest place probably.
Lots of great services there. That would be the place I would start if I were starting my franchise today. All right, here's a curveball. Gun to your head, something you care deeply about at great risk. You are forced to start a new business right now in the next 30 days, and it can't be something that you are currently doing or you're currently involved with. Where do you see the opportunity in the marketplace? And if you had to start a business today, what would you do?
Do I have to be as old as I am right now?
You can do this is fantasy land. You can be anything you want to be.
I mean, if I were, we have been so involved in this AI stuff, this AI business lately, and it is so fascinating to me. I've got, we've hired a number of people that really know their stuff in this. I would love to see where this goes because it's just such a dynamic marketplace. And if I had to, I'd love to do this because it's this whole information technology revolution. It's really changing the way that people franchise, but it's also changed the way they do a lot of things. So I'd love to be in some kind of AI business if I could not be in franchising. But I did, drink that franchise Kool-Aid a long, long time ago, and it still tastes good to me. So no plans on moving anytime soon.
Sounds good. All right, Mark, last question. If you had one sentence to make an impact in somebody's life, what would that be?
I think it would depend on the person I was talking to. If it's somebody who was young, I would say start a business when you're young. When you are older, it becomes a lot more difficult because you've got a lot more responsibilities, and you don't have the same time to kind of runway to recover if you make a mistake. But starting a business, I think, is the most rewarding thing that you can do. And, maybe franchising the business, it might be in your future or maybe it's not. But get into a business, whether you're a franchisee, whether you're a franchise, a potential franchisor in the future, or anything. I would say get into business for yourself. If you're young, I would say get into business for yourself, and you're going to find not only is it going to be more fulfilling, but it's not a single day is going to seem like work to you. And it's going to seem you're always building something. You're always doing it for yourself. You're banking on yourself. To me, get into business while you're young. That's what I would tell people.
Perfectly said. Mark Siebert, incredible career. You've helped thousands of people out there. Thank you so much for being on the Unemployable podcast.
Well, thank you, Jeff. Thanks for having me.
Yep, this has been great. I'm Jeff Dudan. We have been on the Unemployable podcast with Mark Siebert. As always, thanks for listening.